Hi, everyone, and happy Friday. It's Alyssa Corm and Ed Carson here with a look at the stock market today. And on today's show, we are going to break down the action for the major indexes, not only for today, but this week. We also have a couple of stocks that we're going to take a look at. Ed, what might those stocks be?
Yeah, good afternoon, Ali. We're going to take a look at solar IPO Shoals, 5G chipmaker MaxLinear, and sort of a review of Caterpillar, which we've been highlighting in IBD Live this week.
That we have. And then we're going to wrap up with sort of a battle plan for the week ahead. Ed, to provide some great thoughts there. But first, a look at the major indexes. And since it's Friday, we are going to do some candlestick analysis. Here is Thinkorswim from TD Ameritrade. So Ed, the NASDAQ itself closed roughly flat, just barely up today. The Dow essentially flat as well. The S&P 500 down 0.2%. The Russell 2000 small caps, a bright spot today, up almost 2.1%. So a relatively quiet Friday for the NASDAQ in a week that saw us pulling back yet again, but just a little bit.
Yeah, just a little bit. Speaking just strictly about Friday, I mean, on Friday, the growth rebounded, not just the small cap Russell. We saw some of the ETFs that we look at, the FFTY, BOUT, SMH, these growth type names, they're up 2-3% as well. So growth, which had been leading the downside in the last few days during the pullback, definitely led on today when the major indexes, as I said, basically went nowhere. As you look on the candlesticks, you can look on Wednesday and Thursday, you can see how we fell sort of hard in the morning, but then closed relatively modest with modest losses like 0.7, 0.6 on those 2 days. So we came down after hitting that half standard deviation in that area for a while, sort of butting up there. The NASDAQ was getting sort of extended from the 50-day line, which is sort of the red line down there. And so we've come back a little bit, which isn't too much of a surprise. I mean, you don't know how far it's going to pull back. We don't know if this pullback's done, but it's, you know, this was not a surprise, and it was relatively gentle.
Yeah, and it's been a very resilient run that we've seen. Every time we think that we're starting to get a little overheated, we find support at or near this 21-day line for now. But let's flip on over to a weekly chart, and I'm just gonna zoom in here a little bit. So what a run we've had. I mean, if you take an even further step back beyond just the run that we've seen since November, from the coronavirus crash lows, we've held really well in these regression channels. We continue to do so, even with a candlestick that is showing us a red bar. What does the weekly chart tell you here, Ed?
You know, it is really amazing just how steep this ascent has been. I mean, yeah, there was a correction in there. It's been a really steep ascent. I mean, it's pretty amazing. The only downside I would say is that great markets can be a bad teacher. So it's you can see why with the market going this strong, if you get into some growth stocks, how well they've done. But you know, the market is still looking strong. I think that investors should be careful because this eventually will end. It's still going on right now, so enjoy it and take advantage of it. But just remember that you have to also be ready for it not to be trading that way.
So when you're saying good markets aren't a good teacher, basically you're saying that maybe you can get away with bending the rules sometimes. Can you elaborate on that a little further?
Yeah, I mean, it's just like there's been some wide and loose bases, or if the stocks pull back, that's okay. You don't need to sell because it'll bounce right back because the market kept on doing that. It's sort of like if you have a substitute teacher who doesn't really try, you know, it's like, oh, you're all getting A's. That's probably what almost every student was getting during this coronavirus. Oh, you're at home, you're getting A's. It's like, but did they learn anything? You know, that doesn't matter. But it does matter long term. I mean, if you take the lessons from this year and then you start buying wide and loose bases and you don't have sound sell rules, and you let stocks round trip and then they fall down, you can easily see your gains wiped out and take big losses in a more normal stock market rally. But this has been great. Hope everybody's really taken advantage of it, and hope they still are. But you definitely want to make sure that you try to want to be adopting sound rules, sound bases, sound sell rules.
Yeah, we're big on those rules for buying and selling individual stocks. But another part of our methodology is following the market's lead. So we're gonna continue to do that and remain flexible and look at those signs that we're seeing from the NASDAQ. Now, something else that tells part of the story, Ed, are the margin debt levels that we're seeing right now. So this is one of our psychological market indicators, and we are seeing that creep back up. Can you give us a bit of an explanation as to why you wanted to highlight that this week?
That's right. And this, you can find this at investors.com under the market terms of psychological indicators. So that's a place where you can find and then it's one of those subsets. Now, margin debt is really high, but what we've traditionally looked at for long-term market tops, like the start of what might trigger a bear market, is when the margin debt gets 55% above a year earlier. So we're not there. We're not there. It's up 42%. A couple of things is that, that's high. That's the highest since 2007. So, it's just about there, and the comparisons are probably actually going to get easier because in February and March, there was sort of a decline. You can see the start of that run. So it'll be pretty easy to see that rise even more. So that would still say, well, that's not too much. It's something to note. But I would just say that in addition to this, we also have the rise of leveraged ETFs in the last few years. And we have the explosion in call options. Obviously, we've seen it with Tesla. We've seen it with GameStop. We've seen it with a lot of things. And it just means that probably investor leverage is even higher than that margin that would say. I mean, we don't have a comparable number. We haven't really we haven't figured out some kind of uber leverage number, but it's something that maybe the margin debt is actually understating how much exposure is out there. And so if things turn bad, you could see, the leverage come down quite quickly as it did in 2007. I mean, that's one reason why you saw such a bear market. We had such leverage, all of a sudden, then it comes off. So, when we do go down, it could go down hard.
Just definitely a good indicator to note, in addition to some of the froth that we are seeing out there in the market, all those climactic moves with a lot of different names, and we're keeping tabs on all of that for you. So I'm now going to flip on over to MarketSmith to show the S&P 500. So this pullback, again, wasn't really much of a pullback, even less so for the S&P 500, didn't even come down to its 21-day line. So can you provide us some quick analysis here?
Yeah, and actually the Dow rose for the week, and it's because, the S&P was sort of half tech, half old economy. And, the Dow, so in many ways, this week was more of a quasi-partial little mini sector rotation out of some of the more frothy names and speculative growth and into maybe cyclicals and, financials. Some of those did very well this week. So it's just something to keep in mind. And we'll talk a little bit more about that. But obviously, so to some extent, it was a pullback. Some extent, it was just a rotation. Not that it has to be like a permanent thing, but for this week, there was some of that element out there.
Yes, great to note as well. And another area of the market that we are keeping tabs on is the IPO space. So this is SHLS Shoals in the energy solar subsector, ranked a strong 4 out of the 197 industry groups that IBD tracks. And this is looking pretty good here, Ed.
Yeah, it's got an IPO base. I think the buy point is like 41.86. Just 10 cents above the old high. So that's the buy point. And this was our stock of the day today. But you could argue that there's sort of an early entry, depending on if you do flat line, downward sloping, different kind of thing. I don't know, somewhere around 40. I mean, just to be sort of vague, it's not entirely clear. You probably could do an early entry, from here, somewhere in that area. It just, this is actually a pretty nice looking IPO base. I mean, we've had some wild IPO bases, but it rallies and it does a lot. It ticks off a lot of boxes. It rallied from the start, so that's nice. Then it's consolidated relatively tightly.
Depth of 16%.
Yeah, I mean, some of
Pretty
these
tight.
moves, it's like they look big, but when you see like some of the moves are like, I think there was one move like after the first few days, 10%, but lately it hasn't been crazy moves. You know, when we've seen some other IPOs where they're daily moves of 15, 20%, which is nice when you're on the upside, not so much fun when it's on the downside. I'm not saying that this one could quickly just turn around and become crazy either way, but you know, it's nice to see that tight action, a little price discovery.
Yeah, we have the relative strength line hitting a new high before the stock hits a new price high. So that's pretty bullish. It's profitable. And we have, almost 30% top line growth adjusted, and we will get the first official, though, quarterly earnings report from Shoals. It's expected, it's not official yet, in late February. So we'll have to see about that. But for investors who are looking still to add some exposure to their portfolio, if you're opting to do that, Ed pointed out this early entry here. We always, though, want to make sure when we're buying a stock that we have our exit strategy in place. So we want to limit losses at a maximum of 7 to 8%. But you see a stock that has some nice fundamentals out of the gate in terms of an IPO and the industry group strength, which is something that one of our special guests this week on IBD Live was really hammering home, David Ryan, the importance of looking at that group strength and the top groups when you're looking for stocks to buy.
And actually, just to reiterate, I think people should go back if they can go and watch that IB Live on Wednesday. David Ryan, three-time U.S. investing champion, really pounded the table talking about the need for sound bases and the need for sell rules. And he also pointed out some of these groups that are doing very well aren't necessarily the growth names. This one is solar, but there's also some other things. So definitely look for top groups. So that's an excellent point.
Yes. And moving on, let's take a look at MaxLinear, ticker MXL, in the semiconductor group. And it has earnings out of the way here, Ed. Came below its 50-day line, hit a little bit of resistance there, but has been able to recover. And so it's eyeing a buy point now. What stands out to you about this stock?
Well, it has been really strong action, and there's a little bit of resistance in the last few days. So at least it's not just straight up. I mean, it looks straight up on a weekly. So it's not like a handle, but there's definitely a base there on a weekly chart. So that 38.81 is a legitimate entry. I mean, it doesn't show up as a base yet on a daily. Maybe it needs a few more days, but on a weekly, it's definitely there. It's nice action. The RS line, it's not a new high, but it's now above that very short-term level. It's clearly gone up. The growth was tremendous in this stock. So in the last quarter, Matt Galgani did a story about this on IBD stock analysis, went into detail about the company and the technical action. So I encourage people to take a look at that. So it's a 5G play. Those are pretty strong things to be looking for.
Yeah. All right. Another one for the watch list, ticker MXL. And speaking of looking for growth in other places outside of growth stocks, Caterpillar among them. Clearly, we're not seeing that strong sales growth, strong earnings that we typically like to see with top growth stocks. But the mining group is getting a lot of attention, and Caterpillar among them being an industrial play. And it is just continuing to move higher, adding another 5% on Friday. Pretty impressive.
Yeah, and it probably was benefiting from Deere rising, and then a lot of mining stocks rose, like copper hit a 9-year high, so a lot of mining stocks went up. So this, Caterpillar is sort of in both of those kind of fields. We talked about this earlier this week. It sort of cleared a short consolidation in a 3-week study. Actually, it started there. We talked about IV Live right in
what we
there.
were talking about there. Yeah, and
then
go ahead.
And we added a swing trader at that point, so it was clearing that early entry, and then it had a 3 weeks tight and a short consolidation that I got over this week. When we're talking about it, nudged a little bit. So those were a couple of places that people could get in, into this stock, and had a few days to do it actually. Today it's extended or right on the edge. I'm probably looking a little extended because probably could technically buy it up to about 210 or so, but it feels a little bit out there. But yeah, the numbers are not great right now. I mean, when you put the global economy on a massive recession, basically shut down the economy, that's going to take a toll on a cyclical name like this. But the growth outlook for the next 2 years is pretty strong. So that's what investors have been looking at. It's been a real leader. You can look at the RS line, that's a multi-year high. So that's definitely something to be paying
Mm-hmm.
attention to.
Yeah, because a lot of the tech stocks that saw those explosive moves right out of the coronavirus crash have taken breaks. Some of them are now maybe rotating back into that leadership position, but this provides some of that diversification away from tech.
Yeah, and I think it's really important. This is something that Mike Webster, before he left IBD, he was talking about. It's like the diversity of leadership. We don't want people to be diversified and like stocks that aren't doing very well just to be diversified. You want to have a little bit of diversity so you're not all in IPOs. I mean, if you're in a bunch of IPOs, you could be down 30% in a day if the market turns, even if the market's just down a little bit. I mean, we've had those days. So you're having a stocks like this, Caterpillar, or some of the other cyclicals, or JP Morgan, or some other stocks that are actually doing pretty well right now. One, it protects you, but it also clues you in. I mean, if you have Caterpillar or you have a financial, then maybe you're paying more attention to those names, and it's like, wow, this is really working. I should get even more into it. So even just taking a small stake in some of these other spots can clue you in and say, maybe I should be putting more money into this sector.
Mm-hmm. That's right, because I think that was one of the tricky things when we had the rally that started right after the election. We had this pretty severe pullback, right? That was related to the positive vaccine news, and a lot of the software names and work from home plays that had been so successful in the post coronavirus rally got hit really hard. So if you owned all of those names at once, your portfolio may have been hurting pretty badly. And then that could have maybe altered your psychology about the very new early rally that has now taken place since last fall.
Yeah, and I think that was a great day for a lot of other stocks. A lot of the cyclicals had a great day. So yeah, absolutely. So that's a very good point, because those days have happened, and that's not that unusual to have like just a sector just get absolutely whacked when the rest of the markets is like, oh, what? No big deal.
All right. Well, speaking of no big deal, it looks like the NASDAQ and the other major indexes kind of shrugged off the pullback this week. So as we're a little bit less extended than we were, Ed, what do you think investors should be thinking about in terms of positioning their portfolios for the week ahead? Now that we have come down from highs a little bit, is it time to start eyeing more actionable buying opportunities, or what do you think?
I mean, look, it's uncertain. We don't know if the pullback is done, because if you look at the prior pullback, we felt that was a much more sharp one. Not that it was that harsh ultimately, but we had a really big down day, and then we had sort of a mealy up day that closed at the lows, in there, and then we sold off the next day, and then we rebounded. So you don't know if the pullback is over. So just keep that in mind. I mean, maybe it is, and so there's opportunities out there. There were Shoals, maybe MaxLinear breaks out. There's things like that, so you can think about that, but don't be sure that the pullback is over. I mean, you should always be doing that. I wrote about earlier this week. I think that you want to think about, it's not just if you have a 1 or 2% loss in stocks, but if you have all of your stocks and you're on margin, they're all down 2 or 3%, the stocks individually may look okay, but that's hard to take. You sort of need to stress test your portfolio. What if the market comes down, 4 or 5%? You might have a portfolio that will fall 15, 20%, depending on what kind of stocks you have. What can you take? What are you going to do about that? Maybe, you should have rules and set that up, because that can be really hard to take. You see all this red in your portfolio. You want to have a plan going into it. So not just your individual stocks, but have a game plan for your portfolio. But it's still a strong market. I often am very cautious. I know I said this on IVD Live. I try not to be so negative. It's a lot of great. This market is still doing well. There's still a lot of strong names out there. People should still be invested, in my opinion. So they should still be taking advantage of this strong market while it's going.
Yeah, and have that exit strategy. But I think it also speaks to the importance of buying right and looking for those signals early in a new market uptrend, and having that watch list ready to go at the beginning of a rally, getting in right, adding to those top stocks, and being able to build those positions so that way when you are taking profits and trimming, maybe you are able to stay a bit more invested because you have a big cushion. You can look at those 10-week lines instead of, oh, I just bought this and now we're pulling back. I'm round tripping, that kind of thing. When you're buying later in a rally, when the market is starting to show those signs of getting extended, and all of the other factors that we've been pointing to that are indicating a little bit of euphoria. But again, we don't have a crystal ball to let us know exactly what's going to happen. But staying invested for now, we are in a market uptrend, but we are keeping an eye on the exits, maybe just with one foot nearing the door. But what do you think, Ed?
That's a great point. I think, look, it's never easy to know when to sell a winning stock, but buying right makes that a lot easier. At least you're selling with a solid profit in many cases in those situations.
All right. Well, we're going to be here every step of the way, no matter what the market conditions show, providing that insight for you, not only on what the broad market is doing, but underneath the surface as well, buying opportunities and selling strategies, portfolio management tips, and more, you name it. So we appreciate you sticking with us on this Friday and with IBD in general. So many great outlets to get education, whether it's on IBD Live every morning, our daily morning live stream, our weekly podcast through our app, our other apps like Leaderboard and Swing Trader, those platforms providing great trade ideas as well. So we appreciate that. I know I love following what Leaderboard and Swing Trader are doing. Lots of great ideas from that. But that's it for today and this week. We hope to see you Monday morning on IBD Live, investors.com/IBD Live. Thanks for watching. Have a great weekend.